Good afternoon. It's Tuesday, February 13th, 2024. I'm Jared Hall with Harvest Investment Strategies. Welcome to the week ahead, our weekly video update for clients and people in our network, where we detail events that may impact financial markets each week. Before touching on the events of this week, let's unpack last week's market action. The S&P 500 index closed last week above the 5,000 level for the first time, rising 1.4% to a fresh new record, as a round of better than expected quarterly results boosted investor sentiment. Earnings from various sectors propelled positive sentiment last week, as it looks like the fourth quarter of 2023 is proving that it was solid enough to justify at least some of the gains the market has experienced since Halloween. We've still seen a divergence in returns this year between mega cap stocks and the rest of the market, with nearly all the returns going to mega cap companies. This trend has been going on since around the year 2000 and has reached unprecedented levels when comparing the capitalizations of the NASDAQ to the Russell 2000 indexes. While the trend could continue, we tend to think that small to mid-cap companies may be due for a rally, as their business models are more drastically affected by the expectations of future rate cuts. Talking about rate cuts, that leads us to this week's market action and economic news. Today, the markets received the CPI print for the month of January, where prices were up 0.3% over the month of December, outpacing forecasts for a 0.2 increase. Year over year, inflation was up 3.1%, defying forecasts for a faster slowdown in inflation. The markets this morning did not like the inflation print at all, with many stocks gapping down at the opening bell. With the release of the January CPI, the market expectations for a March Federal Reserve rate cut have almost gone to zero, currently down to 8.5% likelihood of a cut, when just a month ago that likelihood was near 80%. This will mark the first instance in 2024 when the market expectations got it wrong. Perhaps something to keep in mind as we move throughout the rest of the calendar year. With the inflation talk moving the market this morning, I wanted to take a minute to dive into some of the specific inflation metrics in this January CPI print. Here are the numbers on a year-over-year basis. Transportation up 9.5%, shelter up 6%, food away from home up 5.1%, electricity up 3.8%, food at the house only up 1.2%, used car prices down 3.5%, and gasoline prices down 6.4%. Later this week, the market direction may be impacted by the release of the producer price index, housing starts data, and we'll have the tail end of earnings season from companies that are in the S&P 500. We'll be watching to see if the PPI numbers show inflation coming back stronger than expected, as well as if small cap stocks react drastically to the inflation data. That's all for this week. Thanks for watching.